Sounds like an interesting experience. I got to see it myself. Okay. I mean, after a while, man, I don't know if I'm growing old here, but I feel like I've been most places, at least enough to feel like I've actually traveled around quite a bit already. But yeah, journey never ends. Uh, Man, I don't know if I'm growing old. Here we go. Okay, perfect. Hey, good morning, folks. It's 10:01. Let's get started over here. Fantastic markets, I would say. I think for the most part, if you're curious about my take on it, I think we were waiting until Wednesday for, the Feds to basically share what they're going to do. And then basically news came out, a little bit of a pop, sell off, and then Thursday was when I really saw the markets take off. So personally for me, I was looking at the week as like a yellow light, green light, and what happened in the marketplace was really Thursday was really the signal where I saw just all the money coming in from larger players, right, across the board. And so Thursday really became a green signal, in which case I think things are looking good right now, right? It could always change because after the signal fires a green light or whatever, then now we need to manage or watch progress, right? What I want to see next is the markets to continue to progress in, holding a moving average, a trend line, or whatever, right? It needs to stay above that. So as long as that remains true, then I'm getting actually pretty bullish right now. If we look at, the indicator over here, right? We also have, look at that first green dot right there. That's actually a long signal, and this is across S&P 500, Nasdaq, Dow Jones, and Russell 2000. What am I saying? But yeah, we basically got a long signal right there. I think things are looking pretty good. Again, as long it has to be managed, right? It has to be things look good as long as those rules are respected and we hold above, certain lines and stuff, certain prices. This is, what you see on the screen right here is Arista Networks, right? We did a pretty deep analysis of it last week. We basically look at the charts, of course. We zoom out, we see that it's going into essentially new highs, right? Very strong stock. We understand that it's not paying a dividend yet. If I last recall last week, as we analyze every single metric in here, we dived into the press release and the investor relations report or the investor presentation, and we came to the conclusion that this is a pretty solid company, right? So check out the performance just for the week. It went from 360 to 384, and that's also, if you plug it into the magical indicator over here, let's see if we got another buy signal, right? Well, not much of another buy signal, but a stronger, we move into teal color, which is basically a buy signal. The green dots right here are the fired, long signals right here, but you can see it's not always going to perform. Of course, like you get a fire green long signal, you then want to manage and see if it holds a certain price area, like for example, 351 or 350 right here, right? But this one is moving higher, and so yeah, I think looking across the board, markets actually look pretty good. I don't know about you guys, I'm getting a little excited, right? It's when markets have determined a direction and is trying to move meaningfully higher, then yeah, I'm going to participate. Now, you might have some folks who are saying, but Fed's cut, 50 basis points, whatever, that means recession, blah 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 blah, right? I don't know. I feel like I've been around like emotional narratives like that or emotional comments like that for a long time now, and at this point for me, it's just kind of like you could say whatever you want, but the markets, if more money is being deployed than yourself, like it doesn't matter to me. Like at this point, I prefer not to listen to anyone. I prefer just to look at the markets and try to look at it objectively. And we're looking at the markets right now, right? We're looking at the S&P 500, and I can see objectively, collective market participants are trying to push prices higher. So that in itself speaks volume more so than anyone that is like super opinionated and can forecast the direction of the markets, right? I'm not forecast. I wouldn't say. I guess you could say I'm kind of forecasting, but my forecast is more like what are the big players doing? So I'm not really, I wouldn't say it's really forecasting. I'm just kind of like mirroring, oh, I see capital deployment, institutional participation, prices moving and elevating to new higher prices. Then yeah, like that to me is like that's meaningful effort for prices to go up, and I want to participate. It's not really me forecasting. It's just like, hey, like it's confirmation that the players are coming in. Ivan says, Kay, when did you talk about the indicator to go back and check that lecture? When did I talk about the indicator? Well, the indicator last week, so I issue a report every week. Last week, the indicator was saying yellow light on across the indices and across the Magnificent Seven. Though I saw yellow light, but then what I saw was like a developing green light. So even though it said yellow light, my own system, again, the system that I have over here with the fancy colors right here, right? This is like an $8,000 system, but I'm not always going to rely on it 100%, right? I'm also going to apply my own discretionary judgment. But the beauty is that I get to leverage like, other traders who, again, this $8,000 system is built off of like other traders who have also been trading for 10 plus years, right? And so now it's like getting to, I guess, the advanced stages of analysis. Oh, I closed all my screens. Let me try to open it back up. Oh, come on. I hate it when this happens. Wait, there we go. There we go. Perfect. It's like when you wiggle around the screen, it just closes everything. But looks like not everything opened back up. So give me just 1 second here. Everything is kind of misplaced. I'm sorry. Your question was, or your comment was, I lost my train of thought because this thing closed out. Um, what's the indicator is what the indicator is in a nutshell. It's not really. I don't know, like in a nutshell, it's kind of hard to say because I'm actually pairing it with like multiple systems. But basically, I'm just leveraging it from the folks over at oh my gosh, I forgot their business name now. John Carter's options trading community, right? Basically, these are their indicators, and I just combine like multiple ones together to kind of see like what the different pros are assessing. Again, I mean, these aren't at this point, I think in your journey, I think if you're really trying to get into this in your journey, you want to identify who are the top investors and traders out there and what they're doing, what their techniques are. And you actually want to just get their collective consensus, actually. Like, I'm not just leveraging these guys, right? These guys are like, giving me a little bit more advanced insight into like how they think with their quantitative algorithms. But I'm also leveraging things like, like the classic Minervini and Zanger and all that stuff as well, right? Those guys know how to analyze the markets, and again, I'm also trying to be a student of the markets and trying to just learn from them. But then they also can't forecast the markets if you watch them long enough. So it's a little bit of everything, right? And so if you ask me the indicator in a nutshell, it's spotting like near-term momentum and when momentum becomes explosive, right? And so we're seeing a lot of trades that are pretty explosive right now. If you look at a report that I issue every week, I think my top two focus for the week was actually Facebook and Netflix, right? Those were really explosive. I mean, Netflix hasn't exploded yet, but Facebook started to explode. Now, again, once we start to explode, we break out, we still have to manage the position. So we have to see if markets could still elevate to new highs, because if markets actually fail and turn around here, then going back to Bukowski's principles of like, chart patterns and stuff like that, that would then be a broken pattern. And a broken pattern then would be actually the reverse. So you see, like it's actually not that easy. Where like you might identify a breakout, it moves in your favor, you think momentum's coming, but how do you identify momentum? Like you kind of have to look at like maybe 100 stocks, 100 core stocks in the marketplace to identify like, oh, this is proper momentum that's coming into the market. So it's actually pretty hard because again, you could have a breakout failure, and that could become damaging as well, right? I mean, like I think the one of the best examples was like a breakout failure is like CrowdStrike right here, right? Where it took basically, excuse me, a complete turnaround. The coffee's kicking in right there. So you see the pink line right there, right? Up until this portion right here, right? For the vast majority of participants, you can see massive volume right here. You can see the volume right here. So it's almost like wow, like someone's actually really buying it, but then it failed right here, and then it massively drops, right? So according to Bukowski's principles, right, a failed pattern becomes an anti-pattern. So a bull flag that fails a breakout, it becomes a major bear flag in that sense. And if that's the case, if you stuck to that principle and you're like gutsy or like a speedy trader, right, you would have bet the opposite and you would have capitalized significantly right here because this was like a nice downturn move. So yeah, I think the more I'm learning myself too, right? I'm always like trying to get better. But what I've come to conclusion, like a few of the lessons that I've learned is that it's really about the best time to make the most money possible is when you have collective consensus. In other words, a euphoria or a mania event. So it's nice because those mania events, that's actually when I made the most money in my journey. So the most money that I made in my journey was probably like the during the pandemic crypto boom, right? That was like the most I've ever made, like by far. So let me show you. Go to crypto, right? It was basically that first leg up in just the overall markets. So going back to that 2020 to 2022, this 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 basically rally right here. Sorry, let me give you guys perspective. But and then I realized like, oh shoot, this thing could happen over and over again. So the biggest portion for me, I got to refresh here so I could get access to some of the drawing tools. My biggest run in my career. Again, this is not just it wasn't just Bitcoin, but it was just basically like everything. This was probably like my biggest run right here, right? Excluding it was really like right there. So my biggest run right there in my career has been that period. But then I've seen stuff like this over and over again, right? And so the philosophy or conclusion that I've come down to is that, what if you could just optimize the trade, in which, it does imply market timing, but what if you just capture the best moments right here, right? Are there techniques to capture these best moments? And I've come to the conclusion that there are players out there who time the markets really well, but what I've realized is that it's like it's funny because I've learned their techniques like years ago, but it doesn't you don't register it until like years later, which is kind of wild, right? So some of these players in the marketplace, I think they've cracked the code in terms of figuring out when markets will really run. But the truth is, I personally think it takes years and years and years to see. Like you might have the answer up front today, but it'll take you years and years and years to kind of build that mental database in your mind and understand how stocks move or just markets in general, right? And then you have to also live through several cycles to kind of see like, oh shoot, like it's the same movie over and over and over again. So I'm pretty aware that we're gonna have these mania sessions over and over for the rest of our lives. It's just a matter of like when those mania sessions happen, do you have the capability to understand what's going on and I guess take the opportunity, take the trade, because if you don't, then you just have to wait for the next mania, and the next mania always happens over and over as well. Like venture capitalists, right? They'll invest and for the long time, right? And they'll go through like boom bust cycles as well. Like for example, like I think one great example is like Twilio, right? I don't know if those VCs are still holding it. We can actually dive into Twilio, but look at this, I'm pretty sure some of them are still holding even down here, right? But for me, it's like now I'm really learning to like, can I optimize and just capture the winning periods, and then like at least like at the bare minimum, like stop out right here. I know it sounds so perfect, right? And you might think it's impossible, but that's the endeavor that I actually want to chase after, because I don't know. It's just the longer you are in the markets, the more you realize like these things actually happen pretty frequently, and so you just gotta, I don't know, find a way to well, you gotta study it. That's actually the truth, right? The truth is like we all actually have to put in the hours. So I'm putting in the hours every week with you folks here, and I actually have a long list of like maybe like 50 stocks I want to cover today and show you like the different modalities that it's not just modalities in terms of like the different stock modalities, but there's also environment modalities. You know what I mean? Like like I'll give you an example. The COVID pandemic market modality. That was like one modality versus like post pandemic 2022 bear market, as you see right here. That this if I move this over here, that was another modality. So how do you play in different market modalities? That's something that I again you can only see the modalities once you see the full cycles, right? And that's why it's good to see the different stages, like this, one, two, three, four stages by I always forget his name. I have his book, Stan Weinstein, right? I have his book on my shelf right here. Ivan says, "This is my second uptrend. How do you avoid selling too quickly and miss big moves?" That's super hard. My question to you is like, we're trying to fine tune that question and avoid selling too quickly. Uh, Again, like you kind of have to have like experience in seeing like how a breakout moves, right? Like SMCI right here, right? So this is another example of like, can you optimize this and just capture the best plays, right? Most likely you'll probably capture this right here, but this is the monthly chart, right? So it doesn't really, we're looking at a very optimistic case right there. But really, like, how do you know? I think I've come to conclusion that the optimal number, Ivan, like how long? Well, again, it also depends on the caliber. So it depends on several things, right? It depends on like what is the current market modality, right? Or what's the current market environment? If it's a bear market, then your breakouts, I will have to adjust for how long to, potentially hold and how much to elevate risk management, right? So you also need to know market environment. That's so you have to tell me what's the environment. So if you ask like right now, I think market environments is actually turning out to be pretty good, and as long as it sustains, then I think something like a Facebook could run for 60 days, right? So I'm watching, like SMCI, right? SMCI right here. If we analyze this, the breakout point right there, where it started to elevate to new prices, that's the breakout point right there, and it ran for about 60 days. That's about 60 days, right? Correct me if I'm wrong. Yeah, that's about 60 days. So I think and if you understand the estimation and the caliber of the breakout, and it's like 60 days, it's gonna run for 60 days, right? But then like again, you also have to deal with emotional management because once you get it right and it becomes really right, how do you manage your emotions here? Like you might sell out too soon. So yeah, it's a lot of things, but I think you just kind of have to experience the full cycle of it to really get a feel and like understand all this, right? And the best way to do that is just to study the charts, study the markets. I mean, in here we kind of study everything, right? I'll show you guys like fundamental analysis and everything, understand what the business is, and then sometimes we might get deep into the technology because it's like, it's just kind of it helps to understand what's the best technology. But then at the end of the day, like the more I analyze and the more I realize it, like what it comes down to like is basically just the charts right here. Because in the well, at least some folks could invest with a blind eye and not look at the charts, but for me, I personally like to see the charts so that I could calibrate to where the current market conditions or market consensus, or stock consensus is currently at, and then decide if I want to participate at that price point or not. Right? It's just like being a little bit more savvy with like the entries and exits. But if you want to go like like in Warren Buffett style and just not look at any of the charts, that works too, right? Because what you would do is what we did last week with Arista Networks over here, where we basically just went in here and all we did was just look at current market metrics to see where it stands, right? Whatever I highlight over here. And then we basically look at the sales and then the leadership and then, all the investor reports and stuff like that. So you could just invest off of, the statements right here. This is the income statement. You could just invest purely off the income statement and the balance sheet, and then you could look at the cash flow statement to see where capital is being allocated. So that's a technique as well, right? Don't just focus on don't narrow your focus to just like what I'm doing. But it's like there's like literally like many ways to play this game, and I've seen so many different styles that it's just there's so many ways to play this game that if you learn all the ways, it'll paralyze you. And so that's why it took me so many years, I feel, to figure like what my style was. And I think that's every person's individual journey of like that's your job to like going out there and figuring out what your style is. Uh, because there's just so many ways to play this game. It's a lot. So when you say this is the second uptrend, right? What stock are we looking at? Because now we could double click into that stock and analyze that case study, and then use it for like future positions, right? So folks, today I have over 50 stocks that I actually want to analyze, and I see a lot of like money flowing into the markets because again, like how do you develop like we might just look at Arista Networks here, right? But where do you go to develop understanding of what the market environment is? You know what I mean? Like, yeah, like, and you might just look at USA market environment. So you look at the S&P 500 here, but like again, like like it helps to kind of know it, but it's not necessary to know it. Like at the end of the day, you could just focus on one stock and how it's fundamentally doing in terms of price action and its fundamental business and its earnings capability and earnings forecasts and hype and narrative around it, all that stuff, right? And maybe, it's divine leadership like Elon Musk or whichever. But as you see, like every company has different nuts and bolts to it that will influence the way it'll travel. But what I try to do every week in my weekly report is I'll basically scan the entire world, right? And it goes back to the concept of like we can't see the 8.2 billion people in the world, but when we close our eyes or look at it on a screen, we can see 8.2 billion people. Therefore, this is where we train up our analytical skills. You see what I mean? So that's what I do every week with the report because I purposefully look at everything in the stock market, right? And just kind of get a snapshot feel of like what every asset class is doing. I know it's a lot of work, but it's like work that I want to do because I want to build that analytical muscle, right? Which is the analytical muscle is the ability to see 8.2 billion people in your mind because physically it's impossible to see that. I love that example. Um, we keep going back to it, but if you type in global population, right? It's provocative, but sometimes we need to be provoked to kind of see with our eyes closed, right? So this is the example of, the Chinese emperor, dynasty emperor, who has, I don't know, 8.2 billion in wealth. But how did the Chinese emperor manage to see the wealth? He or she needed to have all their sub commanders or lieutenants or whatever to have us do like some sort of system and pass the scroll up every week so that they get a capture or consensus of their net worth, right? So if you want to start a business today, Ivan, right, whatever the business is, like a lemonade stand, right? In the beginning, in the lemonade stand, right? When you have one lemonade stand, you're squeezing the lemons, you're smelling the aromas of the lemonade and all that stuff, and you're engaging with the customer. But let's say you scale up to Ivan Corporation, Lemonade Corporation, and now you have like 10 million lemonade stands. Are you really going to be at every single 10 million lemonade stands? No, at that point, your role escalates to a higher abstraction, where what you do then is just basically track the 10 million, or did I say 10 million? 10 million lemonade stands, and you're just thinking analytically, and you're like Jensen Huang, and you're only meeting with several key players in your company who's managing the business because it's just impossible to see 8.2 billion people on the planet. After some point, you have to elevate your ability to just see analytics right here. So that's what we kind of come in here every Sunday and practice our analytical thinking, right? Because that's the only way you're going to see scale, and that's the only way you're going to realize like how much money is flowing into the markets right now. So every week, I'm open to doing the analytical work, which is I track the entire markets from the USA markets to the European markets to the Japanese markets, understand globally what's going on, and then I'll look at every segment, like every industry, and see which industry performed, and then I'll look at the core, Magnificent Sevens, right? The Magnificent Seven stocks are seven stocks that have the highest weight and influence in the stock market. If any one of those, show structural damage, it has the potential to bring down the markets and cause like a global volatility, right? So what I see this week is that we're actually moving away from global volatility post central bank announcement of 50 basis point cuts, right? So from that, I'm interpreting like, how's the market interpreting this right now? How's the market responding to this? It's all analytical because again, we're studying and we're looking at something at such a huge scale that sometimes we disregard how big 8.2 billion people is on the planet, right? So it's again, it's critical analytical work that you realize that it comes when you're truly wealthy, I guess you could say, because again, like if you got like I don't know $1 million, then yeah, you probably want to see like, oh, my home in Silicon Valley is worth $1 million or $2 or $3 million, right? That you could physically see your $3 million. But when you get to like $300 million in net worth, you actually don't see your wealth anymore, right? That's what I was saying last week, right? I started, I invest in all these startups, and I'm just like, man, like, I don't feel cash rich, but like I feel equity rich. But like, I guess like, feeling rich is just like I said, like, just imagine like let's just say tomorrow, right? Any one of us, like Kevin or Lily or Liz or Bernard or Janice or Ivan, like, just imagine tomorrow you suddenly have your name is suddenly on a contract, on an equity contract that says you own $1 billion of a company. That's literally like what it feels like to be a 100 millionaire. At least I think so. I'm not a 100 millionaire, but at least I think so, right? You just suddenly have ownership, and that's it. And then now all the banks recognize that, oh, you have $1 billion in assets, we will loan to you, and then you have access to more cash, and now you feel cash rich. But that cash rich derives from equity rich, and equity rich is just your name on a piece of paper or digital document or whatever. It's weird, right? So that's how it feels to be like a billionaire, I guess you could say, which is kind of wild. But even even then, when you have $1 billion net worth, you have to again become very analytical and understand how you're splitting the pie here, right? So that's why we go in here and we look at some of these larger players, like Warren Buffett over here, who's managing $279 billion dollars, and we see how, we're learning from someone that's actually managing 200, almost 80, well, basically $280 billion dollars, and we're seeing in real time, at least in real time of like 30 days lag, because they don't need to report like real time, right? But we see that he's at 30% of his wealth in Apple right here, and that's a lot of money, by the way. Right? Do they say the dollar amount, market cap, dollar amount? Dollar amount wise, well, hold on. This is the total market cap. So about almost Apple's almost 3.5 trillion, right? But the value of Warren Buffett's position in Apple is about 84 billion right there, right? Wait, is that the right value? 84 billion. See, the numbers are so big, I gotta like double check sometimes. Yeah, so he's got 400 million shares of Apple that's worth 84 billion. Pretty sure it's 84 billion, right? Yeah. What am I saying? 84 billion because he's managing 280 billion. So you see that like after some point, it's gonna feel like monopoly dollars where you don't really care about it, but it's the equity value that really that that you take the equity value and you go to the bank and say, hey, look, my equity value today, it says that it's worth 84 billion. How much will you loan to me? Right? So that I could go access more social decisions or social opportunities, which is like it opens you more doors to like private events, networks, people, well networks same thing, but insights, et cetera, et cetera. You just get more access to things, but at the end of the day, right? It's like you make all this money, like you could buy a mansion, but you can't buy a home, they say, right? Right? You could buy, I don't know, you, you could buy access to many things, but you can't buy time, right? You could buy the best doctors, but you don't buy health, right? So don't forget, like fundamentally at the end of the day, there are more important things, and you could consult with like ChatGPT and say, hey ChatGPT, like what are things that I could develop each day that fundamentally money cannot buy, and it'll tell you things like like Kay's Sunday lecture, where we come in here, we practice, we genuinely practice, because you can't buy this. You can't buy experience. You can't buy going through analytically going through the pandemic. That was a once in 100 year event, and I'm so thankful that I kind of recorded at the time, and I could always go back, refer back to it, and think about how I was thinking during the pandemic, right? Analytically, because again, this is like this is how we travel very, very far analytically, right? Which is why it goes back to what I was saying last week. Like someone that is very analytical, I think I would, in my opinion, say they've lived, a lot more than someone who hasn't seen the analytical side of things, because now you get to see perspective. Hopefully that inspired you folks to, kind of get into the weeds of what we're doing here, right? And like understanding the final form of the data. In which case, this is like a data product right here, right? This is the final form, which is the price action. But it speaks loudly because what it's saying is that the markets are trying to go to new highs now, and because of that, well, it almost looks like game on this week. So things are looking pretty good, and I like to dive into like the different stocks and now show you like I guess like what I'm seeing. I mean, we can look at the macro, but I personally want to look at stocks. But you guys let me know as well. I'm always open to whatever you guys want to look at. I mean, I already have like an action-packed list of stocks that I want to look at, over 50 stocks today. I don't know if we'll get through all of it, but I guess shall we dive into it? It's already 30 minutes in, right? So looking at the S&P 500 this week, I mean, it's making meaningful effort to go to new highs, right? And as I said before, like even though we go to new highs here, what's key next is that we continue to manage, watching the position by making sure that it continues to progress. Because if it turns around like a crowd strike, it can immediately go the other way, right? So yes, like we are moving forward this week across the markets, and I am seeing money being deployed into the markets. So that gives me additional confidence that as a smaller, tiny player in the game, I should also try to start deploying in the markets as well. Because again, it's not up to me to decide. It's just I don't think I'm forecasting. I think I'm just copycatting the larger institutions here because I think they have way more money than me and they know where the markets are going. So I will go where they go. That's pretty much the conclusion. Bernard says, I wish the market list would slow down to a gradual increase going forward. 20% up for a year is pretty amazing. Yeah, it is, right? Because if we look at the S&P 500 right now, year to date wise, we're up 19.55%. So I guess if you want to pull up some of the tools that we have in here, excuse me, we'll pull up the seasonality indicator right here, right? So I think now you guys kind of have a feeling, or at least I have an understanding of like people like Jensen Huang at NVIDIA, because at his level of wealth, right, like multiple trillion dollars in company valuation, like at his level of wealth, it's really just like you're talking to key people that manage your business. You're just having Zoom with them anywhere in the world, and all you're really sharing is just a thought. Like you don't need to physically meet in person, but you just meet mentally at that point to talk about abstractions, to talk about like you meet virtually to talk about the 8.2 billion people on this planet because you know for a fact that no matter how physical it gets, it wouldn't make sense for you and your commanders to talk about the business because physically you can't see the entire business. You can only see it through an analytics dashboard. That's the only way us humans could see at scale, unless someday I don't know, we evolve to become like, I don't know, like like something else, I guess. Then we start to see like, oh yes, I could finally see 8.2 billion people on the planet. No, that's not possible, right? So now that we understand, how far the eyes could go and how far analytics, I guess the analytical eye could go, that's what we do in here. Every week we practice, deciphering or digesting or consuming the final data product, which is that next data point that the world releases every week. I mean, every second there's a new data point about the world. But again, like it's not helpful to analyze every data point every second, but what's helpful is just to analyze the aggregates every week, right? Not every week, but you could do like I like it every week. I think every week's a nice pace, but you could do like monthly or quarterly. I mean, larger funds they do it like right very very slow, quarterly adjustments. So we have to remember that, right? Different players of different scale and size, they'll analyze things at uh, different what's the word for? I'm trying to think of a word. Different frequencies, right? So if you're analyzing at a high frequency, you're probably day trading. If you're analyzing at like a weekly frequency, you're probably swing trading. If you're analyzing at a monthly frequency, you're probably investing. And if you're analyzing at quarterly or 6 months or 1 year, you're probably long-term investing. So yeah, that's why VCs do quarterly updates, analysis with their portfolio companies, right? Because they're looking at 10 years out, and so in 10 years, right, how many quarters could we squeeze in terms of meetings? You kind of get the number. Um, because if the business doesn't perform, it doesn't go become obsessive about KPIs, which is numbers on a screen, then you're gonna hit your targets. And that's something I wish I realized myself sooner. Is that like if you want to see performance in your own life, I realize you gotta really get obsessive with the KPIs. I hate to say that, but it is what it is. And then the other thing I learned as well is that the quicker you become shameless, the better. So two life lessons for me today. The quicker you can become shameless in life, which is like you don't give a damn about what anyone thinks, is really good because I still feel like that impacts me today in some cases. And then the other one is oh my gosh, what was the other one? One is be shameless, and then the other one is I lost my train of thought. See, just like that, the thought just floats away. Maybe that's a sign I'm getting old over here. Now I gotta go back and revisit recording. Uh, uh, damn, how did it slip my mind like that? Anyways, all right, whatever. We'll get back to it. And so this is seasonality, guys. So what we have right here. So Bernard says, it's a little concerning that we're up so much for the year already. Yeah, we're up like 19.55% right here. And historically, we're going. I mean, September wasn't that bad as it seems. September actually performed, right? So this was the baseline case. the baseline historical model, but now we're currently up here. So we're heading into October, and it looks like markets are attempting to break out. Um, I think I'm seeing green light. So uh, again, it might be green light, but you remember you have to have a risk management point somewhere in there. So let's start looking around the markets. Now that we know the S&P 500 is moving to new highs, we look at QQQ real quick. QQQ is also it's not moving to all-time highs, but it's out of this quantitative line right here. That again, I didn't draw it; the computer or the machine drew it. So we're now above that, right? That's progress right there. We're above that, and it's moving higher. So I like that as well. Let's look at Dow Jones real quick. Again, we're just doing a quick high-level top view, and then we're going to jump into stocks like we usually do. Dow Jones also into all-time highs. Look at that. So you tell me, right? You tell me it looks bearish out there. What I see with my eyes right now, confirmations that prices are moving higher for both S&P 500 and Dow Jones. And then we go to IWM over here. We can see that IWM is also kind of approaching all-time highs. Well, kind of again, I like the break of a trend line right here, right? We let the computer draw it, and this is objectively what it's saying. We're over that line, so therefore we're making progress. So we zoom out. This is what it looks like. It could get pretty bullish as we start to, go into new highs right there. So that's looking pretty good. So USA markets look pretty good. Real quick, looking at the Japanese market, seeing all I'm looking at is it above the 200-day moving average? Are we correcting from that prior period? And if you slap a trend line on it as objectively as possible, 2 points make a trend line. And yes, that's 2 points right there. I connected this point and this point, and we see that is objectively over that, and also objectively over the 200-day moving average. So what I see right here from this moment and beyond, that is progress, and I want to see that continue to make progress, right? So it seems like Japanese markets are recovering a little bit, but it did go through pretty bad selling action right there. Looking at the European stocks 50, right? So we can see that it's holding the 200-day moving average right there. Oh, I should pick this one. It's holding 2 points, make a trend line, right, above the 200-day moving average. Now the next one is the top resistance line. So again, 2 points make a trend line, but sometimes you might want to squeeze in multiple points. But and remember, when you do, it's kind of dangerous when you do that because there's a little bit of subjective. But you got 1 point here, 1 point here, well, 2 points right here, and 1 point right here, and then here. So meaningful progress would be at this above this line and beyond, right? So we can get above that. That starts to look good in the European markets. Let's check out the VIX right here. What's the current state of volatility out there? We're still elevated, right? Because ideally, if you guys know what I'm looking for, is markets become better when it is sub. Why isn't my visual showing? Oh, there you go. When it's sub 15 right there. So I need this to be below the blue line before higher confidence, but that's okay. You're not always going to get perfection in the marketplace, right? What you actually get in the marketplace is that sometimes some things will move first, and it's just out of your control. And then if we pull up the very expensive $8,000 indicator, we put in, last week it was showing a yellow light, but I was calling a yellow light and green light because I felt like, things actually look kind of good. And then this week, starting Thursday, I saw the money come in, so now I'm in the green light mode personally. So we put in S&P 500, Nasdaq, plus Dow Jones, plus uh, IWM. There you go. And look at what we got, guys. We got that green dot right there. That's a fire alarm signal right there. So across the indices, we got a fire alarm signal, right? Again, based off of the Grandmaster's quantitative system. How far are you dating your call options? I have a range, because like I even have PayPal calls. PayPal's coming up, and those calls are like a year out or like very far out. I think it's like actually, yeah, it's pretty far out. So it's a combination of things. Um, but it depends, right? Like I even had like I had Meta. So check out Meta. We'll pull up Meta. Look at that green light on Meta right there. This is Meta right here. I know it's kind of small, but you guys let me know if it's too small. But Meta basically had a green light right here, and I had I was trading the 570 Friday expiration with like 2 days left. So on Wednesday, right, I basically at the low I came in, I bought the 570 calls, and then I sold it the next day when it was really green towards like the 560s. So then that's an example of like a weekly or like a 2 days to expiration. So I also play those too, right? So that's an example. Now I think Meta is probably going to run a little bit more, We might pull back a bit, but I'm thinking in the next 60 days, I think there's a lucrative trade on it. But again, not investment advice here, guys. But that's one of the top trades that I'm going to be chasing in the next 30, 60 days here. Right? Because it seems like market participants are coming in. It's not just Facebook being a market leader going into all-time highs, right? Being a market leader as a market leader should, but I'm also seeing money coming in from other angles. So it's kind of padding my thesis, if that kind of makes sense. This is why I want to pay attention to the environment, right? And then we have an official breakout, right, above the line on here, with basically, let me do this one, right? Let's do that right there, right? We basically have, it's breaking out. You got a green signal here, green signal here, so double buy signal right there, according to the grandmasters who have been playing longer than I have, right? I'm leveraging their intelligence, and again, I'm also looking around the world, and I see that things are looking pretty good. So, and then we're also post economic number event or Fed announcement, 50 basis point cut, initial reaction. Again, this still it looks promising, right? But you got to remember that my view will shift once we go below here, right? If this turns around, we go below. That's actually, again, by Bukowski's principles, that's a fake. That's a busted pattern. That's the that's a that's a fake out, and it'll actually go the other way. So that's why after it starts to run, you have to actually continue to manage. So yes, I think Facebook will run for the next 30, 60 days. So now you can kind of like start figuring out how to play the options and stuff. Now let's actually plug in the Magnificent Seven over here. So we got Meta plus Microsoft plus, gotta move this, plus Google plus Apple plus Nvidia plus Tesla plus, am I missing one? Nvidia, Apple, Amazon. Did I get Microsoft? 1, 2, 3, 4, 5, 6, 7. There you go. Check it out. What do we see, guys? That's the Magnificent Seven, right? We got all seven in here. What do you see with the Grandmasters? I mean, of course, like you be mindful that they're not always right either, right? But this is a moment where it's lining up with K's discretion from like what I've seen in the marketplace. Again, what I'm doing every week is I'm getting in here and I'm genuinely working with the data. I'm genuinely flexing my analytical brain muscle here every week and seeing like, hey, what happened last week? Was I right or wrong? Blah blah blah. Or I'm practicing. I'm getting comfortable with the data, and then I'm overlaying it with several other expert systems like the grandmasters over here, and I can see that they're also seeing a green based off of their rules. So now it's giving me additional confidence, which is okay. Macro looks good. Money's coming in from an institutional perspective. The grandmasters here have fired a green light. I'm seeing, market leaders like Facebook going to new highs, right? There's several confirmation points that I like, which makes me want to participate, and so I'm going to go chase. So rules based, I guess you would say, right? Those are the conditions that I'm seeing, and again, these two dots right here are just additional layers of analysis. So the question now is like, how long can it run, right? The chase just started, right? We basically got a long signal like as soon as Thursday. Thursday was like the okay, let's get it, let's go chase it. Again, not investment advice here, guys. Um, we do what we can. Now, if I individually pull them up, right, we already saw Meta, which is like, again, according to these grandmasters, they would be fired long, right? I like that. That's in line with like my thinking as well, right? Because a market leader is leading in a good environment. I like that. What else? Let's look at Apple, right? Now what I'm doing is I'm individually looking at it. So this is an example of like in some cases they could be wrong, right? Because this one was actually a sell signal right here. So we have sell signal here, but when they're wrong, you might want to always have a risk management stop. So ideally, you probably would have had a risk stop right there where that gray area is, where you would have got out if it's wrong, right? If you strictly follow their system, I wouldn't strictly follow their system. I would just again use it as another expensive indicator or quality indicator to see what they're thinking. And because again, I think what you kind of realize is that eventually you realize like, oh, they're experts at risk management, and that's what we should be focusing on. So that's the realization there. Amazon, I think Amazon looks pretty good. You can see the system over here. So it went from blue to teal right here, so it's getting pretty aggressive, right? Further confirmation, but we didn't get like an official fire of a signal here based off their expert system. Let's do Netflix. Ooh, Netflix. I mean, look at this one right here, right? So I'm liking Netflix. It continues to improve, right? So it's moving up here, but it seems like they already had a fired long over here, but then you got some red right here. But again, I'm overriding their expert system with my system that I've learned from. So that's the key here, right? You always have to be thinking. There is no you can't put an autopilot unless that's I mean, you're trying to shoot yourself in the foot right there if you're trying to put an autopilot. You actually have to do the analytical work, and the analytical work is like closing your eyes and understanding the meaning of 8.2 billion people on the planet. That's what it means to do analytics, I feel. What does the data mean, right? Let's look at Google. Google over here, right? So Google, they had a fired short signal here, so that worked out. But then it started to go up, became yellow, so that probably would have been the stop out right there, right? Again, I'm just looking at the fangs real quick. I think the one I like the most is probably Tesla. So Tesla, so for me personally, Tesla also fired a long signal. So again, I got that drawing right here. So Tesla right here, we had resistance right here. It cleared resistance. So this was I'm aligned with this long signal right there. So you see Tesla, they had several long signals right here, even at this price point at 229, 230. So they were already going long. I mean, based off their system, they would have went long on Tesla right here. For me, again, I have confirmation here, so I like Tesla moving into next week. I think Tesla in the next 30 days, or even within the next 2 weeks, right? If you want, Ivan, if you want to structure like some weeklies, I think in the next 7 days, 14 days, and 30 days, and maybe even 60 days, with the way markets are elevated right now. Again, market leaders leading, which basically says Tesla is also one of the market leaders. It's lagging, so maybe we should push this one up. So I'm seeing meaningful progress right here. So again, I like that from a decision-making perspective. Again, we're directly looking at the markets here, guys. Like this itself is the markets. I know these charts are a little bit tough, but let me know. We can switch it back to the regular FinViz if you guys like. But I'm just showing you, giving you guys a little bit more of like the expert system and what it looks like. Um, it's helpful, right? It's kind of nice because like you go anywhere in the world and you just pull up your laptop and you pull out this expert system and you're like, oh, this is what these guys are thinking. And they're going long here. I'm gonna go long here too, which is actually really nice. It's almost like professional training wheels, right? It's not just like it's like like the whole goal of like learning how to ride a bike is to get the training wheels off, right? But in this case, my goal is to get like the golden training wheels on, right? Like you get off, you learn to ride your bike a little bit, and then later you want the golden training wheels on. Or in other words, you have like a tricycle, right? You can't fail with a tricycle. I mean, it's really hard to say you fell off of a tricycle. It's okay to say you fell off of a bicycle with two wheels, but if you told someone you fell off of a tricycle, I don't know. It's like you gotta tell me how you did that, man. So yeah. So this is kind of like a tricycle, right? Like I'm not saying you can't fail. I'm just saying that you have the confidence that other people are not there. I mean, physically they're not next to me, but their thought process is in front of me in my screen, recorded in an algorithm, right? So in other words, it's kind of like having one day, I'm aware of this, right? One day I won't be walking this earth anymore, but maybe folks in the future might have access to like a K agent, AI agent. And so it's not the real me, but maybe it's the digital me, right? Or an artificial intelligence version of oneself. Sadly, but that day will come. Anyways, knock on wood, right? Let's think positive. Okay, so let's continue to look at the list, right? So let's we can stick with I mean we can continue to look at the expert system if you guys want, but I can move around and show you guys like the regular stuff because I think most folks in here you're much more familiar and comfortable with like FinViz at this point, right? Because this is the FinViz club. FinViz, if you actually do the analysis, it's actually one of the best screeners on the internet. I mean, there are other ones, but this one has been with me for like 10 plus years, I guess. I think it's been 10 plus years, like maybe like 11 years now. But yeah, you see this one moving up, again, moving out meaningfully from this trend line right here, right? Can we identify any volume areas? You can see lots of volume right there. So we know that support. We know a buyer continues to step in. Someone is definitely buying 180. So we know the floor right there is 180. And so now we see meaningful progress above 238. And I think this one could run to 300. I mean, eventually, not right away, because if I knew right away, like I think right away we're gonna run to 260, right? Because that's gonna help you optimize on like cheap options contracts that really explode in value. But I think Tesla's in play. Tesla looks good. as long as it's above this line right here, right? So I have rules. Remember that. You don't forget that. Like you can't don't be like, hey K, like you actually say you were bullish on Tesla, but now it's gone down. Yeah, like bullish. Everything in here is like it's always bullish with a condition. I'm bullish as long as it's above like this breakout point right here, 236, 235. If it fails 235, then I will back off. So that's how it is in trading. If anyone comes to realize that. Now we're also above meaningfully above the 200-day moving average, right? So you guys kind of see the practice that we kind of do here every Sunday. Like you have to practice this. Like how do you expect to like really dissect a company if you're not practicing it every week? Like understanding the fundamentals, right? Like Tesla is largely profitable right now. Actually, I'm actually curious about who Elon Musk reports to. I think we already looked at it, but for some reason, I know it's like the bigger funds like BlackRock and stuff like that. But we could go in here, right? And we could see like, what these fundamental analytics look like. And I always like to go to ownership. But we could go in here real quick and I'll show you what I'm looking at. We can see the top direct holders, right? Elon Musk has, his cousin Kimball Musk has way more shares than him, right? So he's got like 620,000 shares. But we can see that the boss that they report to is Vanguard. Vanguard is basically Elon Musk's boss. Vanguard, BlackRock, State Street, that's who they report to. Person with the highest conviction, I'm looking for individual billionaires that are taking a position in Tesla, right? Because all these are funds, these are entities. Basically, entities are like, a group of people, right? But what I'm looking for is an individual billionaire who's got high conviction. So what I'll go to is I'll actually go to Guru Trades right here, if I recall correctly. And what I'm going to look into, wait. This is a lot. This is a more advanced tool, by the way, guys. Let me go over here. Let's go to Guru Trades, and I'm trying to filter away the funds and just focus on the the actual like individual billionaires, right? And see what they're playing. So like these guys are here, not the funds. I forgot how could I filter that away? Let me see. I know I did it before, but why can't I remember right now? Real-time picks, top 10 holdings, sector picks, group picks. I don't want those. Latest picks. I don't want latest picks. Guru portfolios. I'm trying to find. Okay, here we go. So these are all the individuals right here, right? So Warren Buffett to all these other billionaires that like Ron Barron and stuff like that, Larry Robbins, excuse me, et cetera, et cetera. What I want to see is actually you can actually filter down these and see who has the best performing portfolio, right? So 10-year average is David Tepper. But I know, these names they frequently come up again. So we should look at David Tepper. He's a hedge fund manager. We should look at Ron Barron, right? Also very active investor. And I don't know about this gentleman right here. I haven't looked into them, but would always be nice to learn new portfolios. Prem Watsa, right? Indian billionaire. He's also in here. Hey, there's a Billy, not Nguyen. I thought it was a Nguyen, but it's a Nygren, right? Can't pronounce that. Bill Ackman's in here. Frank Stantz. Okay, let's look at David Tepper because he's consistently performed every year, and so I just want to see this guy's managing $6.17 billion, and this portfolio is updated as of 8/14, right? So like a month ago. So that's what I'm saying. It's a 30-day lag, but you can't really expect more than that. We go in here, we look at the weighting right here, and we see that his biggest position, and this guy's a performer, is Alibaba. That's interesting, right? That's interesting that that's his biggest position because I'm also looking at Alibaba. So let's go into Alibaba. And by the way, gold looks pretty good too. So we go to Alibaba, right? Alibaba's been beaten down for like the longest time ever. But now with the news of like, rates cut, right? We go back to macro and recall macro principles. If we have higher rates, then we have a higher dollar, if I recall. Oh my gosh, I'm losing my macro principles over here. Lower rates should be lower dollar, cheaper money, cheaper loans. So good for emerging markets, right? Is that good for emerging markets? Let's pull up EEM. Again, we're trying to recall our macro principles over here. But EM over here, you see that it popped up right here on Thursday, right? So basically the news is impacting EEM. So you can see that we are meaningfully above this line now from a technical perspective. So we're seeing interest in emerging markets right now. And you can also see a large amount of volume right here at this area right there. So that's suggesting that a large player has been buying around this area at 42. 42, right, is the buy area of the large player. We're making a meaningful movement above that trend line right there. right? Again, I'm stacking the criteria here, what we're seeing. And we also have the central banks announcing a 50 basis point cut, not 25, but 50 basis points. We're going back into easing mode, which is also going to be really good for software companies. And I'm waiting to see, if software companies start to perform. But this is really good for emerging markets, right? And so what's classified as emerging markets? Well, you got things like, China. So we look up the Shanghai index over here with Asher, ASHR over here, right? And we're trying to see if there's any activity here. So not yet. It hasn't responded here yet. That's fine. Maybe the A shares. We'll do FXI, I shares, large caps here, right? Let's see if the large caps have responded. A little bit, actually, yeah, the large caps have responded. We are technically above this line right there. So we have a response from the large caps, right? Now, what I want to do is look at China's technology. So I'll pull up KWEB over here, another ETF that tracks technology stocks in China. Dollar goes down, right? Yeah, that's the other confirmation that we want to look at because we'll pull up macro, right? Let's go into it. Again, this is from years of like practicing, so I'm able to maneuver this pretty easily, right? So it might look like a cakewalk for me, but for you, it's like, oh, it's a lot, okay? But let me know. I'll slow down if I'm moving too quick. And at the same time, we also see that, the dollar is essentially in decline over here, is respecting the trend, right? There you go. So we continue to have a dollar decline, and we want to see if it's making a new low, right? It's currently about to make a new low right there, a new recent low, and it might test this low right here, right? So that's actually pretty good for emerging markets. So we know David Tepper being a 6.17 billionaire, right? And now we want to, kind of gauge like geopolitical conflicts between us and China and stuff like that, see if there's any escalation. But it seems like his biggest position, high conviction position, and we looked at his portfolio has been performing over the last 10 plus years. He's the top performer over the last 10 years out of all the billionaires, right? We can see Alibaba also moving higher here, and we zoom out, we look at how depressed Alibaba is. Then we have our thesis, essentially. Oh, I wanted to remove that. We have our thesis now. Hold on, I gotta refresh this. You see what I mean? I mean, okay, now the only fear is that some folks would be like, well, yeah, I don't want exposure to like China equities because I have a certain risk perspective on that. So that could be a stopper too. That's a mental stopper, right? Um, you gotta understand like our own biases too. So the part where I highlighted is the largest amount of volume right here. So if this thing were to rally, right, the next resistance point, the sell point would be around 160. So if we could launch from here, we could go upwards of 160 is my price estimation on that, which is kind of nice because that's a double, right? I mean, it's about a double. Double double. In-N-Out Burger. I had it earlier this week. Fresh. I mean, okay, again, they still have, vegetable oil that they soak the fries in and cook the meat in, but in terms of like choices out there, you're not buying like, the McDonald's abomination, right? I'll eat that from time to time too, but McDonald's has like 70 ingredients in their burger, right? While In-N-Out has, fresh ingredients that are significantly less. So, right? If we're smarter folks walking this planet, we also need to realize like who's ripping us off in this life, right? So young folks who are drinking Celsius have no idea, and even Diet Coke really. I was a victim for the longest time. So these days I've actually switched back to regular Coke because I realize like Diet Coke is even worse. Companies like Celsius right here that have outperformed and now dropping like crazy. It's almost like a change in the narrative, right? Meaning like on the front side right here, everyone's drinking the parabolic curve, everyone's drinking Celsius and stuff, ingredients like sucralose that gives you a leaky gut or whatever, right? And then suddenly, like now in social media, one of the trends in social media right here is talking about, basically like what's actually healthy ingredients, right? So all these young folks drinking like the sugar-free, zero-calorie stuff that's being marketed left and right at the gym or for gym people, to now it's like the reverse narrative I'm hearing, and this thing is just tanking pretty hard. So that's just the nature of a stock, right? It's just like the moment humans change their perception on something, it just becomes like a bleeding value right here. And that is just so much value. If you understand what I just said, there is so much value because a stock's price is dependent on consensus. It's what people believe. The moment they believe it's voodoo, get the hell out of that stock. Like, try to aim to short it. If just suddenly, if you know that there's fear and they believe something about it, that's like the biggest sell signal right there. because no fund manager wants to hold that if you're quick enough, right? Now, can you apply some analysis over here? There's massive volume here, right? So there's a big player that accumulated here, but you see it broke down right there. So that player now is in the red, and so that player probably started selling here based off of their risk, right? Because now we start to understand how other funds operate. And if you're a large fund of like $100 million and a position goes against you, you have a risk manager behind you putting a hand on your shoulder saying, "Hey, trader," right? Or, "Hey, portfolio manager, you're down 10%. This is actually where we sell off," right? And you're like, "Yep, it's just the business. That's how it is." And then boom, you start selling off, and then boom, you get further downside. That's why breakouts, breakdowns, they work, right? This is a breakdown right here of major liquidity pool area where a whale failed to hold right there, and we see the whale was buying pretty heavily at this price point right here at $50. The moment it cleared $50, it's just done, right? $50 went down to $33. So again, you guys notice what I'm doing here? Like I'm like process information. Well, not process information. It's like super potent over here, right? I'm telling you that we want to think about not just like what the stock's doing, but like also the fund, like the derivative of like the person in the stock and how they have a risk manager that forces them to get out of position, and how it could benefit in our favor if we understand the mechanics of how they have to get out, right? One thing is we understand the mechanics of how they get in, and then we understand the mechanics of how they get out. That's money. At least I think so. Um, Yeah, Bernard says Beyond Meat. Let's look at that. I love going over several stocks and telling you guys the story of it and seeing like where the stock like started to break down and died, right? So change in narrative, right? I remember Bernard like years ago when this thing IPO back, man, I was back in 2019 when we were talking. We were in the office and I was like, yeah, I gotta go try In and Out, or not In and Out, Beyond Meat. Now with the knowledge that I have, I just feel like a complete idiot. I was consuming like additional vegetable oils that was just like damaging my health. Like it's just crazy, right? Um, but like Bill Gates will do venture capital in this stuff right here, right? If you go to Beyond Meat and we look at the venture capital over here, using this tool over here, we go to Beyond Meat. You can see Bill Gates Ventures, uh, Bill Gates Beyond Gates, Beyond Meat. There you go. Beyond Meat right here, right? We can see the VC investors right here. We go to financials. We can see that they got a total $150 million in funding from investors. And one of the lead investors, if I recall, was not in there. I thought, yeah, I could have sworn it was in there. Let me see. Let's go down. Sandhill Angels to where's the Gates and Melinda Foundation or whichever. Let's view them all, right? So history. So now this is another topic, guys. Here we go. Bill Gates right here. He did Series D, right? Now, Kleiner Perkins was in there too. Funny. Um, but what was I going to say with this? Where was I going with this? In here, right? It's also rare to have like an instructor that could talk about financial history. So because like you kind of have to like be like there's no way like Bernard and I would remember this without, because we were actually there, right? We were there when it went IPO and everyone's talking about it and had that IPO pop all the way up here, right? But then like fundamentally it wasn't making us money. And look at this EPS. Oh my gosh, like this is the follow up. This is the Bernard and Kay follow up like 5 years later, right? 5 years later we follow up and like look, it continues to lose money. Sales started to die down in 2021. I mean, interest rate crisis right here, right? Also impacted this company. And in terms of dilution, it started diluting a little bit right here, right? In the last 5 years, they increased by 3 million shares. So that's something that we gotta watch, right? Because now you start to understand the mechanics of an entity, right? An entity could work against you by sabotaging its own human capital, borrowing money against its own, borrowing additional debt, getting to more debt, right? Borrowing more money, financing, reckless financing, corporate policies or corporate announcements, fundamental like printing more shares because they need to fundraise and sell more equity, right? Because they don't want to, like it's the same. It's debt or equity, right? So the entity either accumulates more debt or it bleeds out more equity, which is the same thing as it getting into debt because it's diluting you, right? It's just that when it dilutes you, it gives you an option to buy up the shares, but it's basically asking you to fork out more money to maintain your position. So again, the more that we all understand the dynamics of how an entity works, how an entity updates itself, man, I'm telling you guys are coming into like a full blown like end to end how to be an investor class in here, right? What we analyzed so far was just like overall market conditions around the world, Asia, Europe, Japan, Asia, Europe, and America, to analyzing the best companies on collectively with a $8,000 Grandmaster system, to analyzing stock charts, and the price and where the big players are getting in, to understanding the policies of how they get in and out, to understanding the power of analytics, to understanding the fundamentals like this right here, to analyzing the history of like how Beyond Meat performed in the past, to analyzing the venture capital, to analyzing billionaires like David Tepper with $6.17 billion. We learn a lot in here, right? And I know it's a lot. I definitely know it's a lot, but I mean, hopefully, you guys could keep up because it's what makes it fun. I'm kind of like showing you guys the different ways to look at an entity, and the more we practice it, the more you get comfortable and you kind of know what Kay's looking at, because after some point we look at all the angles. And so when you look at all the angles of analysis, what do? Right? Like last week, we looked at Arista Networks and we came to conclusion that fundamentally this actually looks pretty darn good. So what do? Right? In the end, you have to take a position. So we know that this thing is just it's just building up value like crazy in its sales, and it's earning money, and it has like what $6 billion in cash, no debt, 4,000 employees. Like eventually, it's going to bleed dividends. And so this is why the stock price is going up. And it is in the philosophy and the lessons I'm teaching here is that you want to buy the strong ones because, like Bernard says, the strong keeps getting stronger, and this is already giving clear confirmation that it's strong, right? And then if you need more hand holding, we could go into the $8,000 indicator here. We could plug in Arista Networks, and we could see that it came teal recently, which is another like buy signal right here, right? So there's already a lot of like, the tricycle training wheels over here that's like guiding us significantly. It's just no, like at the end of the day, so, you got to meet me halfway and you got to do your part of the analytical work. Like I could show you all the techniques because I'm analyzing live with you guys, which is really fun. I'm actually really enjoying this right now. Um, so yeah, I mean, we just learned that David Tepper, who historically performs, his biggest position is Alibaba. And to me, that's like, all right, like I think we should look at Alibaba. I mean, and then also the rest of his list right here because I could tell these. I mean, I'm bullish on all of these right here. Like I think all these will perform. But even though I think they all will perform, it's a matter of like when am I timing it in and out. So again, not investment advice, but something to consider, right? We could also go in here. Let me real quick, because if he's the top billionaire performer, right? I want to go to his portfolio, and I want to understand how he plays. Because if he's buying beaten up stuff like Baba and betting big, then he has high conviction on cheap stuff, right? But if we look at his actual performance, right, it doesn't look too good actually, because that was a 10-year performance. So 10-year wise, he was over here. So this is his performance, right? You see, so going back to actually no, that is 10 years. Oh, I know. In other words, he did perform, right? He went from 850 million to now 6 billion. I mean, I guess that's performance. His peak performance was at 7 billion right here. So he's just kind of been going up and down, up and down. So you can see like even for these guys, right? After some point, like it's just it's crazy, right? It's crazy to know like like what a quarter a year ago you were a 5 billionaire, and then then later you're a 750 millionaire, right? Um, that's just, and then you're probably thinking like, dang, like, is this something you're ready to handle, right? If you want to go and when you get to 100 millionaire, I guess this is what we have to anticipate. I think we all do, because at that point you become a sizable economic entity or node, and you have to figure out how to manage your fluctuations, and then develop emotionless behavior around it, and just know that you're building a strong portfolio. That's what it comes down to. So we know he's got Alibaba. We know he's got Amazon 10%. We know he's got Microsoft 8%, Meta 7%, Google at 5%, Oracle 4%. What else? He's also bullish on this company. I'm also bullish on this company right here, right? Because this is actually a really good Chinese AI company that most folks don't actually know. It's probably one of the most sophisticated AI companies on the planet. Um, but maybe folks don't know that. So he's got a position here, but I don't see anything I would want to play right now showing recent weakness. So recent weakness is just a recent broken leg right here, right? Gap down, large volume. I want to avoid it for now, right? So that's just the nature of it, right? This one, nothing there. But things like this where it's making some progress, maybe, right? I think this one, Baba, probably a lot longer term, bigger picture, because we know there's massive volume right here. If you could see that volume, it's massive volume right there. We zoom out, right? We know that we're basically, if we buy here, we basically know that we are buying at the range where, the highest amount of buying has ever happened for the stock is about around $80. That doesn't necessarily mean it's a low. It just means that the most activity ever happened at this price, which in itself is signaling, if you read the lines, is signaling the opinion of the markets, which is collectively could be David Tepper, it could be everyone, it could be myself included. But my vote is tiny. You see what I mean? But if we look at the collective market vote right here, it's saying that this price ever was where most people bought it. Does it mean it's a low? No, because it could definitely go lower. But does it mean it's a major point of analysis? Yes, 100%. I think so. 100%. I think this is a meaningful price. And if it goes lower, then guys like David Tepper will stop out and it'll go even lower. So that's why we have to watch these positions, right? It becomes very important. Oh man, I have a list of stocks right here. Okay, let's start diving into them, guys. So Meta we looked at, Netflix we kind of looked at. Netflix going into next week, I think I like. I mean, it's pushing the new highs, right? It's gonna discover a new price that it's never discovered before. It's rediscovering itself, you could say, and it's basically escalating to all-time highs. This I know looks scary, right? A stock that could drop down in like 6 months or less or more or 8 months, whatever, and then takes 2 years, 3 years to come back to the price that it was. Yeah, it's just that's just how it is. But when it goes up, it's going to go up even higher, right? So this thing, I think Netflix, if it continues this rate and if the market conditions remain good, I think this thing is going to go up to $1,000. Again, that's up to you if you want to play that or not. Again, that's just my opinion, not investment advice. I'm just a local internet entertainer out there that doesn't know any better. Tesla. Tesla, right? So also one of the plays that I like for next week. This one, again, I'm recognizing that the rest of the markets are moving up, and there's several points of analysis that I like in here that maybe calls for a long signal, right? So not only that the Grandmaster system says that there's a long signal, but I see large volume here, which suggests that there's a big buyer at 180. There's also support at the 200-day moving average, and then we could also draw a trend line right there, right? So as long as it respects that trend line, and then recently we had like a nice price breakout right here, so it's making meaningful progress to the upside, in which case the next area of resistance will be that prior resistance point right there, 260. If we get over 260, then I think we go to 300. So that's the Tesla analysis right there. Going over to Google right here. Google over here for next week. So this one's a little bit different, right? I'm gonna show you guys different stuff from time to time because that's why I realized the markets will give you different stuff from time to time. So what I just highlighted right there was the machine drawn trend line, right? So one is we are above that now, and we are also above the 200-day moving average. Now volume wise, it's a little pretty everywhere, right? Maybe we can use it, but it's really just everywhere. So not really too helpful, but maybe we go here, but that's playing with the data there. So keep it back at that. What I like about it is we are above the 200-day moving average. Oh, wrong one. We are above the 200-day moving average, and we are above this trend line. So as long as we are above this area, I think continue to remain green. In which case, the next test point is the 50-day moving average right there. So again, if the markets rally, I think this one will carry this one up as well. But this is not the better one, the stronger ones, the stronger ones to play. But it is a play. Let's look at Micron. All right, some semiconductors out there. Maybe we should get a collective view of semiconductors real quick. But go back to Mars's comment. Yes, Bernard, hands-on market research. I mean, hands-on. Should we say hands-on or actual? Bernard and I, we went out to go eat some Beyond Burgers. I don't think he did. I think it was just me. But yeah, definitely hands-on. My hands felt oily after. I'll tell you that. But good thing I didn't eat too much of that. I definitely wanted to try, but um, I don't believe in its health benefits at this point. Lots of volume right here. This is Micron right here. So Micron, very, very pretty right here, right? Can maybe pop quiz. Why does this look good? Any reasons as to why this looks good? Trust me, if you participate, you're gonna learn. If you want, I mean, I'll give you the answer as well, why I think it looks good. Because again, we can line it up with the marketplace. But if you guys want to give it a shot, you can. I'll give you guys like a 30 seconds here while I pull up Micron on the expensive system over here. Why do you guys think this one looks good, right? Because the system right here, it says yellow light. It actually says yellow light. So, but why do I think it looks good? Ah, so you see what I mean? Like, just because I have a system here doesn't mean I'm going to over rely on it. You still have to have your own discretion. So I think it looks good, but the system says it doesn't look too good. So let's actually talk about why. Well, for starters, right? Consolidation around the 200 MA. Nope. But but I mean, I want to say yes, John, but like, good call, but not necessarily because it's below the 200-day moving average. That actually looks bad, right? But then in some cases, when you play a chess game, and it's a setup where it's just like a rare setup event that you're just like how do I play this, right? I'll tell you reasons why I think this one actually looks pretty good. Lots of volume at the range. Yes, that's one reason. Yes. Oh, it breached the trend line. Yes, there you go. Yes, yes, yes. So that's another reason, right? So several reasons. Reason number one, it breached this trend line right here. And I didn't draw that trend line. The robot drew that trend line. Reason number two, right, is what Evan says. It's massive volume right here. So massive volume, reason number two why I like it, right? So I love that. Reason number three, right? Lots and lots of reversal candles and dojis right here, right? Around this high volume area. That reveals to me that there's a player coming up. Now, there is a scary factor. Earnings is coming up as well, so you gotta be careful with that, right? Now we go down, right? Wait, hold on. We don't get fundamental yet. I want to give you another perspective, right? Now this is me, I'm cheating over here because I'm looking at SOX, right, or SMH. You can use either one, right? And I'm seeing that there's maybe a little bit of recovery in the semiconductor space. So here's SOX right here, right? So this is, and I know for a fact, oh, wrong one. I know for a fact that, oh, that was the right one. I know for a fact that all their peers were doing better, right? So again, also violating this trend line right here on the positive side, and also above the 200-day moving average right there, and also you see lots of volume right there at that price. So in other words, you know that big player is coming back right here to hold this 220. So collectively, I see an industry that's recovering, right? I see, maybe I might have looked at Nvidia, I might have looked at other things, but now I zoom into this one and I'm actually liking this, right? So it's just a start. It doesn't mean that's going to run now because your next point of resistance is a 200-day and a 50-day moving average right there. So even if it goes up here, it's going to hit its head somewhere there because it needs to test that, right? But from what I could tell is that some player is trying to hold the $90 mark. That's it. That's just analyzing the market, right? I didn't analyze the fundamentals yet. Fundamentals wise, sales isn't doing too good in 2023, but I need to check 2024 and where it's at. Earnings wise, they're not profitable in at least 1 year here. But shares dilution wise, it's gone down. So this is actually a good thing, right? So they're gobbling up more shares. There is no debt. There's 43,000 employees. Again, recent year there's no income, but sales wise they're doing 21 billion in sales. So 2024 20 billion. So it's higher than 15 right here that you see, right? Sales, quarter over quarter 80%. Damn, quarter over quarter is at 80%. That's a lot. That's a lot. But yeah, so we could zoom out, right? Get more perspective. Can we identify anything as we zoom out, right? We can see that as we zoom out, the larger player has been around this area here, 40. So again, it's not the greatest setup, but it is a setup that I like. That could move, but it's just a near-term trade idea to like around this range right here, right? Because it has to test the next area, and then also according to the expert system over here, or the system of, or expert system, I guess you could say, the Grandmaster system, they perceive a yellow light. But in some cases, I will play, I mean, again, I think if you're like you watch the markets long enough, you will have abundance of like finding opportunities. But to find the opportunities, it's literally like going one by one like this and understanding all the scenarios. And in my opinion, I think if we see enough scenarios, we just get comfortable with like every condition of the markets. So, and I think that's part of the goal here, right? to develop enough of a personal data point. Let's show you another setup. Let's show you another case study out there, and how do you react with each case study. So this one's a little bit different. This one's actually going to new highs. I showed you one that was depressed, but we spotted the player accumulating at a depressed price area. Now this one's a little bit different. This one's actually going to highs. Now the question is it all-time highs or recent highs? It is actually all-time highs. So what do you do? What is the decision here? What do we see here? Again, this is a different market modality here, right? And it's classified as software. We're not looking at hardware. What do you see? Is this bullish? Is this bearish? What do we do? Right? We got to look at all the cases, guys. I know it's kind of fun. It's kind of fun if you get a kick out of it, but it could be like incredibly boring too, if you don't have the proper attitude towards it. Goose or Evan says that's a trend break, but I like to see a little bit more. I think we were talking about the previous one, so this one's a little bit new. But there are some bullish things about this that Bukowski would say, but immediately my style, I like to look at the volume, right? So I like to see where the big players are. The big players have been playing at 35, right? And so typically prices tend to explode away from the liquidity area. This is the liquidity area, right? So prices is definitely exploding away. And it's in discovery mode to find the next higher price. Now, a stock that's going to all-time highs has no resistance. There's no such thing as resistance. The resistance is your imagination at that point, right? I mean, that's just how it is. Like Facebook's going to all-time highs. Like when Bitcoin went over 25,000 or 30,000 or 35,000, for you to say, "Oh, that's too high," that's in your imagination. Because a stock that is at all-time highs, or any vehicle that's at all-time highs, it technically doesn't have a resistance point. There's no confirmation of resistance point. You can't say, like, it's almost like, how dare you, right? Like look, this stock is now officially at all-time highs, and you're gonna tell me resistance here? No, like we don't know that. There's no confirmation. Like you just don't know. That's why stocks that go into all-time highs, it's like sky's the limit. That's why, and it goes back to euphoria principles, which is basically when a stock goes to all-time highs, how does it make people react? How does it make people feel? Right? It makes people feel uncomfortable, but in a good way. So euphoria, mania. So this software company is going through a mania right now, right? And we just can't quite say what the high is. So then, okay, then how do I play it? How do I protect myself? Good question. So what we talk about first, right? The first chapter should be risk management, but sadly, the first chapter is like how to trade. The first chapter should be risk management. And so your risk should be this line right here. That's your risk management right there. Let the computer decide for you, right? It just broke its top resistance line, the TRL. The TRL is more of a advanced technique by a very sophisticated grandmaster on the planet, right? It is a technique that I'm happy to have learned from, but it's they go so far as to make you sign a non-disclosure agreement to learn this technique. But good thing, Kay did not learn through a non-disclosure agreement session, right? So the way I learned it was through really really good investor, and they taught me, and then I realized like this is the technique of one of the top 0.1% players on the planet, which is basically this top resistance line, leveraging this top resistance line. So you don't have to believe me. That's fine. It's not up to me to convince you. But what I'm trying to do is make the teaching in here as quality as the food that I'm trying to eat these days, right? Which is like the 100% grass-fed A2 milk to cooking with ghee or clarified butter, which is from cows, not from vegetable oils that is just in everything these days. By the way, a little bit of a side note, right? We go to futures right here. For the longest time, I didn't realize this, right? But the industry that again, this is my belief from what I've gathered in consensus. The thing that's poisoning the human beings on the planet is probably this stuff called canola oil or rapeseed oil, right? And maybe not so much like the oil itself, but the way it's like engineered. The engineering process of the oil is actually what's damaging, right? Like, it's like the McDonald's burger. The McDonald's burger has like 50, 70 ingredients, which is an engineered like food, and that is like super packed in calories, and that's toxic, right? So what I realized was like for the longest time, I was looking at futures, right? And this is canola right here. It didn't occur to me that, this is the stuff that's in canola oil. And the company behind this, right, is a company called Cargill. Okay, I shouldn't say behind it, but the company, one of the largest companies on the planet behind all this is the Cargill family, right? Now this is big stuff right here because in my career of like trying to figure out like, where all these like top traders and where they come from. Some of the finest traders on the planet have actually come out of this company right here called Cargill, because they're basically an agricultural futures trading company, and also they're also pretty close to the supply chain. And I didn't realize that they're actually one of the largest suppliers of canola oil on the planet. In which case, I'm a big believer now that this, engineer oil is the cause of like rising diabetes, right? Was it diabetes, economic chart, seed oil, which is what we talked about in the past. And it didn't occur to me that, as human, this picture right here, right? Again, I'm just reading the lines, but sometimes the lines are pretty insightful, right? So I understand that diabetes is on the rise, and it's because of stuff like this right here, right? So the seed oils or the canola oil. Um, it's a really popular topic on social media these days, and it really gathers steam. So if we look at this one right here, right, this maroon line right here, it talked about the diabetes cases, and diabetes really, we broke out right here. We went parabolic like recently right here. So this was the year right here essentially, but it started to go up the same time that seed oils have also shot up in basically popularity. So again, I'm convinced because if you read your food like SEC filings, you read anything out there, cereal or ice cream, it literally has like some sort of oil in it. And I'm just like, this is why, like, this is why in the USA we have people who are, larger than they should be. It's like, how's that even possible, right? So it's just wild. It's just wild that, like, was it uh, Safeway tortilla, right? That popular brand, like I'm pretty sure, if you, I guess if you're Hispanic or Latin, you could relate to this brand right here, right? I mean, I'm guessing, right? I'm not, I'm not Mexican or Latino or anything, but I definitely see this at the grocery store. And if we look at Mission tortilla um, ingredients, this is where it gets disgusting, right? This is where it gets really disgusting because it's like, what the heck? Like this is dishonest. But let me see if I can show you, right? It has some of the craziest ingredients ever. Like so 69% of it is flour, corn flour. Then the other percentage is like vegetable oil. Now, don't get me wrong, I also saw that it has shortening in it, right? Which is like, I mean, more vegetable oil. But this is what I'm talking about. Like who's eating this, and it's going to impact their family. Like I don't know why we're doing this, but it is what it is. You look at some of the ingredients right here. So here, vegetable shortening, right? Which is basic. It's in this stuff, which is in the Mission Soft Taco right here, as you see, which is basically what refined and hydrogenated soybean oils. You see what I mean? So going back to this, understanding like diabetes on the rise, why the cases rise, and the correlation with the introduction of vegetable oils to understanding futures prices of canola over here. Right. So I just thought the connection was just so interesting. Like I was just so like like in awe when I realized like why is everyone dealing with this problem at scale? And then you connect the dots and you're like, well, it's this thing called canola oil. And then you're like, wait, who's the biggest producer of canola oil? And then somehow, I cross, the intersection with like, wait, I've heard of Cargill before. That's where some of the top traders have ever come out of on the planet. And then you realize like, connecting the dots now, right? Some of the wealthiest players on the planet have come out of this industry that is largely producing, vegetable oil that is in everything we consume. Now I'm wondering who's the largest producer of artificial flavor. I don't know who that is, but I wouldn't be surprised if it's Cargill. It's wild, right? Anyways, sorry, a little bit of digress, but interesting facts out there, how we could protect ourselves. Um, okay, what stock was I on, guys? I think we're looking at a lot of stocks in here. So let's continue. So we looked at Micron, we looked at Samsara. Let's look at Oracle, right? Here's another flavor right here. Oh, well, we were still on IoT, and we were talking about what this the professional. I remember now. So yeah, so basically the top resistance line is basically, again, it's always back to the principle of 2 points make a trend line, right? And so in this case, these would be the 2 points. I didn't draw this line, by the way. And so if we broke out above this top resistance line, technically this is actually bullish right here, right? A move above this line is bullish. Now, moving forward, you can use this line to maintain the momentum by using it as support. If it fails support, then now you know it's gotten a little bit weaker. But moving forward, if we want to gauge the development of the stock's price action, again, this is very advanced and sophisticated techniques that, again, only that particular grandmaster trader requires you to sign an NDA to learn this stuff. Again, I didn't learn it from that NDA because someone else had to learn it and slip the information, then I got the information, right? So yeah, so the theory is that basically, again, this is the top resistance line. If it breaks out, that's bullish, and it becomes more, and it should act as support moving forward, right? And so that's one way to manage risk in a stock, because now you can extend it out into the future and see that it needs to maintain above that line for you to stay interested. If not, then you have to start cutting your position a little bit as it goes below it. So leverage that. Leverage the TRL. It's an advanced technique. What else? What else? What else? What else? So IoT. Let's look at Oracle now. So this is Oracle right here. What do we see? Do we see another TRL? I didn't draw the TRL. The machine drew that TRL. So the TRL right here, two connects, two dots. Again, I didn't make that, but according to the machine, it's objective, right? So that's the TRL, resistance at the TRL. But what do you guys see with Oracle? What's good about Oracle, right? One could say this is also uh, broadening rising wedge right there as well, right? According to Bukowski, we could go and consult Bukowski as well. As you guys see, I'm using several advanced techniques. Here's some volume there, and there's some volume there, right? So we know that some player has been accumulating at 140, right? And now it's exploded on earnings. Well, earnings was over here. I don't know if that was earnings, but anyways, it exploded up and now it's consolidating, right? So this is actually bullish. This is bullish because all-time highs. Sky's the limit. Sky's the limit, right? So this could be $1 trillion company. This could double. This could be a double. This could be like $300. You guys believe it? I mean, well, it's going to get to $300 eventually, because that's just how it is, I guess. Because all the players on the planet right now, if you're all the players that are watching Oracle on the planet right now, we just don't know how high it could go. And technically there is no prior resistance, right? All the way back to 2000. This is the richest that Larry Ellison will ever be right here, right? As a matter of fact, he's got 1 billion shares in Oracle. Let's go look at his portfolio real quick. Larry Ellison. Is it Larry Ellison? Larry Ellison. Do I not have his portfolio? Is it Larry Ellison? Oh my gosh. Okay, fine. That's fine. Let's go to Oracle. Let's just dive into it. Let's go to ownership. And in here we have Lawrence. My bad. Yeah, he's got 1 point. This is yeah, this is like the enterprise thug. Like, or okay, I shouldn't say thug. Like the enterprise guy. Like, if anyone, it's like high. Like, this is like the high. Like, he owns like 50% of the company, right? Let me see. Let me see. Like, this is, man, he's the richest he'll ever be right here. So I'd be curious to know. Let's see. Larry Ellison net worth. I don't think it's in real time, but it's probably the most ever now. 204 billion. could have sworn this number was lower before. Yeah, it was definitely lower before, right? Yeah, like, oh, not that one. But you see what I mean? Now we get a sense of like how wealth is built, right? Wealth is built here where you see on the screen, which is basically an equity position. Because after you're done with the cash game, right? The cash game is only upwards of like 10 million, but after the cash game, like, does an extra 100K change anything after 10 million or 100 million? Not really. So to get your 50, 20, 50, 100, 200, $1 billion exit, it becomes an equity game. And to be an equity player, well, you learn some steps in here to analyze equities because this is a equities investment club. See where I'm going with this, guys? We got about 30 minutes left here. Uh, I'm being a clown in the last 30 minutes. Anyways, now that we know Larry Ellison, let's go take a look at other stocks over here. We already looked at Arista Networks. I want to circle back on Lockheed Martin. All right, I remember you guys remember me saying Lockheed Martin will perform. Well, it's still performing technically. It's still high. And then the other one that we said that wasn't going to perform is Boeing. So we look at Boeing. Check this out. As we talked about, Boeing is lower now, right? You see that? So what's happening to Boeing? Well, let's see the see the I'm messing up the charts. There we go. See that? So we know that this player right here that has accumulated at 180, and also this other player right here, right? I don't know who it is, but we're talking about billions of dollars. Uh, it went against their position, and then it went down to this player, and now it's against that player, and now they're probably at a point where they have to liquidate. They're starting to liquidate. So as they start to liquidate, it's bringing the stock down. Kind of cool, right? Again, based off the principles of what we know how they operate. So they're in a liquidation phase, and the question is how low? I don't know. But Boeing is, again, we talked about it, right? It's a short play, and then the long play is Lockheed Martin in terms of like getting exposure to this geopolitical warfare stuff or aerospace and defense. So Lockheed Martin looks very bullish. We zoom out, strong, getting stronger. Fundamentally, let's take a look at the fundamentals. Wow. I mean, I love to see what I'm seeing here. It has a lot of debt, by the way. Lockheed Martin has a lot of debt. 122,000 employees. Now I'm actually curious about Boeing real quick. Boeing's probably, news related and definitely sentiment, but let me just look at the financials on Boeing. Yeah, so they haven't been man, Boeing hasn't been profitable for years. That's interesting, but they are doing a lot in sales, 77 billion, because they're selling pretty large things, right? So Lockheed Martin's not too far away, 67 billion, right? So about the same caliber of size. But there are aspects about Lockheed Martin that's very attractive, which is I would say the shares outstanding right here, right? So in other words, like the corporation is not working against you, excuse me. They are working with you in your favor by gobbling up more shares, removing dilution. So that is a very positive thing to see right there. The shares outstanding. Again, this is more corporate fundamental analysis. Then we can look at the metrics here to get a better feel, right? Valuation wise is two. I mean, this is in an industrial company. It falls into industrials. And Lockheed Martin's a market leader and it's leading the way. So you ask me, this is looking very bullish to me. I would say go long here. Again, not investment advice. And you might say, oh, well, okay, that's crazy. Well, did you forget that your imagination is a problem? If you say that's crazy, right? Did you forget that technically there is no resistance yet, right? There is no historical resistance ever. So when you say, oh, its all-time highs is too high, I'm telling you, the mantra, K's mantra, it goes a long way. Don't be cheap, right? Don't be cheap. I wonder when Lockheed will get into the AI game. I mean, with 67 billion in economics, Evan, like it's a matter of time where like it has to get into um, the AI game. By the way, guys, I'm hosting a party October 27th. Sadly it's gonna be on a Sunday, but supposedly the event center is pretty competitive, right? Everyone's gobbled up the Saturday events or Saturday bookings, so I can't book it on Saturday. So I booked the nearest one, which is Sunday. So October 27th, I'm gonna have a party. Love to have all you folks there, and I'm probably gonna bring a screen, and I'll probably talk about stocks while other people talk about anything else, but I'll be there in person. Um, Malvin asks, where does he find the weekly Zoom? Eh, enterpriseguy.com. But um, anyways, yeah, I'm gonna be launching the party. No, Top is performing in Stockton. Don't worry, I will try to host another one in November and December, but it's like holidays, right? So my goal is to get back to doing it once every month. But also, I mean, I personally think it's fun to expand your network because after a while, like, I mean, no offense to the people I already know, I'm just saying like it's kind of fun to like what is growth at the end of the day, right? Like you get kind of bored eventually. Like growth is really meeting that next person that could potentially inspire you to take the next step in your life. So go out there and meet as many people as possible, right? It's the opposite of like don't talk to strangers. It's the talk to as many strangers within the boundaries of being safe, of course, right? But talk to as many strangers as possible. So that's what I'm seeking in 2025 and beyond. But there's a lot of goals. Lots of AI technologies out there. Anyways, this is Lockheed Martin. Let's go on to the next one. Duolingo, DUOL, right? Also all-time highs. If I recall, I think it is all-time highs, but let me double check. Right? I love to look at many case studies as possible. All-time highs. Is it too high, guys? Gotta get used to it because this thing could go higher, right? Because if you said it was too high, if you literally said it was too high right here, right at 245, look at where it is right now, 268. Right? You can't say it's too high. Is what I've learned, and that's the 10-year lesson for me. Like if I could give you a 10-year lesson, that's a 10-year lesson right here, right? For example, like AppLovin over here, right? Look at that. So this is like Netflix right here. If you remember Netflix, Netflix is just about to eclipse its all-time highs, right? Once you hit all-time highs, you cannot say that this price is too high. You can't say it was too high here at 100, 110, 120, or even here. It could go much higher. It's extended for sure, but it could go higher, right? Because someone's really pushing the volume right there and trying to get in abruptly here. Man, it's wild, right? Like that's fast money right there. It's great observation I learned from Kay. Companies that are growing, doing well should always be at all-time highs. Exactly, exactly. Like the market knows, okay? Like do not like remove the idea that you have found a steal, a deal, or whatever. It doesn't it does exist in my opinion, but not easily for the average person, right? You could easily do well by just focusing on the companies that are already at all-time highs because sky's the limit for them. They're in market price discovery mode. The only problem that's making it hard is our failure to respect the mantra of don't be cheap. It's and the best performing stocks are always going to be hard. Like it's just a pain in the ass to buy the highs. But but in some ways, like buying the highs is due to the markets are giving you a gift here and saying this is the winner, man. So there's a reason why it's at all-time highs. But I think too many folks are just like, no, I can't buy that. I gotta go buy Boeing because it's like so cheap, right? And you go to Boeing and you bled out more this week, right? If you bought Boeing, like last month, you bled out even more now. You went from 165 to 153, and you're like, no, it's too low. Yeah, something in my mind is telling me that it's gonna reverse, right? It might reverse. You might get lucky, but like, why gamble that? You have the assurance of like this one already going to highs, and it's a competitive market that other players are trying to accumulate and push us higher. Gravitate towards the winners. That's like the lesson here, right? If you surround yourself with the winners, I'm pretty sure you're gonna get a taste of the winnings. But if you surround yourself with the losers, well then like I mean, if you work at a losing company, right? Like I don't know, 8x8 or Ring Central, what do you think the sentiment is there? It's like, dude, like, oh man, like this life sucks. Like I'm calling all these people and no one's buying my product, man. Like sales is depressed, right? Hiring is depressed. But if you flip it by just making a hard conscious choice to play with the winners, you surround yourself with the winners, it's like, whoa, it's like like people are going far. They're ambitious with their career. They're getting more certifications. Sales is making money. They're throwing parties. Like you got to identify that, right? Bernard says that is excellent advice. It is, man. I'm not even joking. Did he say SGS? What's SGS? Okay, never mind. Sound absolutely SGS. I don't know what SGS is, but it's maybe like sounds good. K, my advice: take your age and use that at the strength getting strong. Yeah, yeah, dude. Like I agree. Like that's why. I mean, like that. Even in venture capital, like that's like what I'm looking for, right? The strongest players, but the strongest players, they never want to talk to you, right? And that's why I don't respond to any inbounds. Like all these startups reaching out, I just don't talk to them. I realize like the strongest one, I have to get my ass up and go talk to them. I have to do the hard work of like, like making a cold introduction right there, because that's where it's at. That's everything in this life, I realize. Bernard says age 60 equals 60% investment in strong stocks. Oh yeah, strong getting strong. Yeah, 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 yeah. That's the answer to life. Strong getting stronger, right? And that's yeah. That's how you're gonna get people to bet on you too, right? You have to operate long enough to know that, to show the markets that you're strong and you're getting stronger. Momentum is a beautiful thing when it's in your favor. Momentum is also a double-edged sword, and it's disgustingly scary when it's not in your favor, right? And that's why I'm thinking like Elon Musk is like an unprecedented case study of an individual with the highest amount of connections on like connection awareness on the planet. I'm just surprised, like like to have like 100 million people aware of you. I'm just surprised, like how we haven't seen anything dangerous. Like if I was Elon Musk, I wouldn't be able to sleep at all. I don't want to be famous. I don't want to give up my privacy. Even though, yeah, this some of the stuff is on the internet, but like I'm trying to stay private. Preferably, I realize this, right? Because like why would you want 100 million people to know about you? Like there are people tracking his jet flights and every step he's taking. I wouldn't be surprised if there are people out there studying his poop. I don't know, but like I just wouldn't want, let's say, the most shadowy figures, powerful economic, assassins on the planet being aware of, in their crosshair. I wouldn't want that. Goose says, "LOL, his poop." Elon Musk. I bet you his stool could probably catch a bid on eBay, right? If we could verify this actually came from Elon Musk, like I'm pretty sure someone would buy it for like $100,000, right? Because it's just like he's captured the crowd's, the investor euphoria or the crowd's mentality, the consensus, right? It's wild. It is just wild. But I wouldn't be. I don't know. I just think he's got the best golden handcuffs on the planet, right? The best golden hand, and I wouldn't be happy if I was him. I don't care if like he's got all the money in the world. I'm pretty sure like it's not worth it. It's not worth it, guys. You know what's worth it, guys? I think what's worth it is like I don't know, like having enough every month, like I don't know, like let's say like 10,000 net $10,000 every month, knowing that your family sleeps peaceful at night, they're healthy, and you're making memories and experiences, and you're eating great quality food, and everyone is like, working like genuinely balanced because everyone is working, but then they also know how to play and enjoy and just living an honest life, like that, man, that just sounds way better than any like and than what I think Elon Musk has. Just my personal opinion. So I'd rather stay private. I'd rather stay popular among investors, but that's pretty much it. I don't think at this point I would want to be in the eyes of the consumer. I think it's just too dangerous. It's too dangerous for my taste. So it's not worth it. Just my take. Bernard says, just remember Kardashian is a billionaire selling stuff. Oh yeah, how could I forget? Right? Oh man. Um, yeah, I just don't think it's worth it to lose your privacy because privacy is the best thing ever. Like you want to be able to travel and you know, like in peace without paparazzi or someone like spiking your drink. Right? Like you think you're getting water, but it's not water, right? Like, oh my gosh, that's the last thing I would want. Shopify. Shopify right here, right? Where's the volume of activity right there? See some volume right there? It's a wide channel. You see that wide channel that, again, I didn't draw that channel. But where are we at now? We're above the channel. And we came out of it. Well, okay, we didn't retest, but we're basically out of it now, right? So this is making meaningful progress. It's early for Shopify, but again, it's going to be like Netflix, right? Where Netflix, it could go down 6 months, but it'll take like years to get back up. So it's going to take some time, but it looks like Netflix, and I'll show you Netflix. Let's pull up Netflix real quick. You'll see what I mean, right? Stocks will take the elevator out and then like take the stairs back up. Stairs, not the Escalade or escalators. Come on, Netflix monthly. Boom, right? Look at that. Netflix took a long time, 2+ years. Shopify, same thing, right? Yeah, it's making progress, but don't expect a lot, I would say. But it could run. I mean, it's possible. But I would trade it. I would actually, if it runs up hard, I get out, right? Versus like sky's the limit, then you hold on a little bit longer. That's just the nature of it. Um, Man, we're learning so much about price action theory, guys. I love it. Like this is I don't I mean personally for me, I don't think it's theory. I mean it is. I guess you could say it's theory, but if you actually try to put it in practice, like you actually realize it works. So I enjoy this deeply. Because I don't know, I'm just happy with the skill set. You gotta be happy with what you're doing. What's the next one? Shopify, Costco, right? Here's another example. Strong getting stronger. Has anyone gone to Costco lately? It's just like, man, everything is just getting more expensive. But it is what it is, right? Like, I mean, I still enjoy their hot dogs, right? It's like the least oily thing on their menu. As a matter of fact, I could actually go for a Costco hot dog right now. That sounds actually delicious. Maybe I might get that later. Imagine if you said it was too high right here, right? Imagine if you said it was too high right here, right there, right? What would you have missed out on if you said it was too high at 550? Well, you would have missed out like $360 move. Right? So yeah, so be careful next time you say something's too high and letting your imagination like look at that. Oh, it's too high. It's 500. Arista Networks is at 500. It's too high, Bernard. I don't think I could buy that. And then boom, 900, right? Let's remind ourselves of Arista Networks real quick. Let's go back to this, right? Currently, this is too high. If you're telling us this is too high, well, I think we got a problem, right? Uh, we got a problem. There you go. So if you think this is too high right here, right? Arista Networks, this is too high. Oh, you just never know. Like look at Costco, right? Like you could have said like, okay, this is where it's slowing down. It's too high, or right there, right? Oh, it's too high right there. But geez, it's a lot. But and wait until Bitcoin clears $69,000. Oh, it actually did. Hold on, what am I saying? Bitcoin did. Wait until it clears like 70 whatever thousand dollars, right? Sky's the limit on that one because technically, it's like gold right now, right? Gold's getting to highs. Like, yeah, we did clear that, but we need to sustain. We didn't sustain. That was one of the key things. But I think this one's definitely going to come around. Uh, because if we go to gold real quick, let's look at gold because a lot of gold stocks are performing right now. Uh, Gold. So gold's in play right now. Don't get me wrong. Um, I like gold, but it's just slow, right? But it's in play right now. Look at that. We actually don't know how high gold could go. Gold could just keep going higher and higher and higher. Like at this point, gold would probably go to $4,000. So next time I see you, you better be like all decked out with like gold chains and necklaces, right? I'm just kidding. But yeah, this stuff right here, and I think it's pretty lag too, because we pull up like GDXJ and all the miners, because supposedly these are the more levered stuff, right? Like, come on, if you, I mean, if you own a miner that owns a gold mine, come on, like you don't own the physical gold jewelry, but like yo, you own a piece of the gold mine. So I think these have yet to really outperform right here. So gold miners are an opportunity right now, in my opinion, and it's definitely in play by my rules. Let's check out the Grandmaster rules real quick to give you guys more advanced confirmation. So we'll pull up GDX real quick, see if they got any. Well, this one's already already fired another long right here. Um, and then let's do GDXJ. Same thing with this one. So yeah, I mean, according to the Grandmasters, they're on board with also being bullish on that one. Oh, that's right. There's another screen. I heard LinkedIn go off. Give me 1 second. Where is that screen? Oh, whoa. Pull over here. There we go. Uh, Playback cannot continue. No available working. Support plays. Okay. All right. Whatever. Anyways. Yeah, I don't know why it's that. Anyways. This is we got 5 minutes left. GDXJ. What else? Okay, you have to see the prices of dining in Las Vegas. $38 for a cheeseburger and $22 for a Caesar salad. I know, right? I mean, shall we close it out with public debt, right? I issue this every week in my report, public debt. So I think you guys have come to conclusion. Next week looks pretty good, but in order for it to remain a green light, we need continuance of um, prices continue to progress, right? So this is the public debt right here. I mean, I think we should be at 35 trillion already. This is actually lagged. So we're at 35 trillion. It's sort of like if you think $22 for a Caesar salad is expensive, I wouldn't be surprised if we get closer to $50. So the only thing that's going to protect us average folks here from massive inflation that's coming because we talked about this, that the governments have no choice but to print money based off their financial structure. Again, I spent years kind of studying that and trying to figure it out, right? At this point, I realize I figure it out, but then what I really should be focusing on is what we talk about now, which is like where are price heading and am I riding price? Like, am I riding along with that price? Because that's all that matters at the end of the day, right? We're just like, are we making money off that, or are we just analyzing for information's galore and I don't know, like informational attainment, right? Infotainment. So that's what I focus on. But I also enjoy the journey of learning. So yeah, like it's just wild. I think I mean, I've already paid $10 for a cup of coffee, and it was an experience. It was the stupidest experience ever. It felt the same thing as if I made coffee at home with my own Vietnamese condensed milk in it. Come on. Um, Life is just gonna get more expensive. I continue to believe that. I continue to see that at larger scales right here. And think about what happened recently, right? Feds easing. Why are they easing? Like making things easier? Sure. But does that mean higher prices? I mean, if we see software stocks go back to growth mode, venture capital is going to get hot again for sure. But things are going to get more expensive. So how do we protect ourselves? My honest recommendation, again, not investment advice, is that everyone learns to start a business and invest. Right? That's probably the two right there, because there's enough AI technologies now on the planet that can make starting a business a lot easier than 5 years ago. Crazy. But competition also elevates, right? So uh, I guess you just kind of have to learn. And then investing, again, very few groups like this. I don't think any other group like this really exists, because I'm actually at a unique intersection. Again, not to be arrogant here, right? But genuinely speaking, like objectively, like I am in Silicon Valley, and I get to be close to the tech, and I'm also putting in the hours to learn about the markets over here. So it's probably, it's an investment club that's in a unique position. And I don't know if I've seen any other investment club that has worked this hard in like the last like 9, 10 years. I don't know how many years now, 8, 9 years. So I still think I'm pretty underpriced. Maybe I have to raise prices soon to like, Caesar salad prices or a burger price, right? I definitely think I'm underpriced, but it's okay because I'm focused on the hours and the training. I think everything else will come. Uh, Mars asks if I'm available for a call. Unfortunately, no. I do get a lot of requests for calls. But I mean, you could talk to me here in the Zoom before the password changes. You know, again, assuming if folks are on trial or whatever, but every month, I haven't changed it this month yet. I'm due for a password change, just letting you guys know. But anyways, folks, we're at 12 o'clock. I genuinely hope you guys enjoyed the education that I shared with you today. I know we went everywhere, right? I hope you don't disregard the richness and the potency of everything that we discuss here, because we go from macro to philosophy and concept and food and funds and billionaires and technology. Like, the fun never ends, and I'm pushing to learn every day too. So every week it's a little bit different because I'm trying to get better every week, and that's pretty much it. But yeah, I think I'm pretty happy with the way the investment club evolved, especially like, us implementing like advanced techniques like this. Like, this is really quantitative analysis right here with all these flashy colors. But anyways, guys, any last stocks you guys want me to talk about or cover? I only got through like a fraction of my list, I realize. It's always like that, but there's a lot of stocks out there that are looking fantastic. I'll take note of them in my report tonight, or my weekly digest and output. Uh, but yeah, I'm seeing money getting deployed in the marketplace. So that's my signal to pay attention more. So this is where the work starts to increase, right? Even though it's gonna be hard. It's gonna be hard because some folks are probably like burned out from like the volatility. Mm, like the prior volatility. But it's a muscle, right? It's a muscle that you just kind of have to train. Reddit make a comeback over here, right? Reddit back above $65, right? It's always better to buy higher. That's why you don't be cheap. All right, guys. Any last questions before I power off? I actually am craving a Costco hot dog right now, or something. Is that time to eat? Who do you recommend for trading? Um, I mean, there's so many. It's like my return question would be, what type of trading? Because there's so many. Thanks, Kay. Great session. Hey, you're welcome, Bernard. All right, folks. Let me know if you have any questions. Maybe another minute or two here. If not, then I'm actually gonna cook something. I've been fasting, right? I try to fast in the morning, but I'm also pretty talked out. Okay. All right. Anyways, we'll just call it a day here. Folks, thank you so much for another awesome session. Believe it or not, today is Investment Club number 359. Yes, that's right, 359. That basically means, was it six more discussions? And I've been lecturing for 365 days. Think about that for a second. All right, six more discussions, 6 more weeks, and I've been doing this for a whole year of lectures, which has been a real pleasure. So, more to come. All right, guys, have a good night, and I will catch you all next time. I'm going to power everything off.